Sabharwal, good morning. You're running late. Early morning squash or late night party?
None of the above. More due to technical issues.
We have two technical experts here. We can solve all the technical issues. What are the technical issues?
Yeah, so I think it was a breakdown. So now they have to predict when the breakout will happen.
Where do you think, my friend, in the market breakouts will happen now?
Yeah, markets are interestingly poised because overall globally the equity sentiment is at very elevated levels. So if we see parameters which determine euphoria or despair, cash levels of funds have come down to nearly 3-year lows. The bullish sentiments are very high. And on the other hand, we have a situation where the inflationary trajectory also seems to be stalling globally in the sense that the declining cycle is stalling, so the easing cycle also might be postponed. So markets, I think, are fairly priced. They have factored in a lot of positives, and to that extent, significant upside on the broader indices side looks tougher. So I think it's a stock by stock approach now.
So, what should one do then, Sandeep? Because there is this outside view, which is that look, election is round the corner. Never say never. Then there is this temptation to sell at these levels. Should one stay invested or time to raise cash?
Oh, I think it depends on how you are positioned. So I think for people who are fully invested, they don't have anything, they have made a decent amount of money, it makes sense to have some cash on the sidelines because some cash on the sidelines always helps you whenever there is a corrective move. For people who are very less invested in the market and then still they are thinking what they should be doing, whatever money they have invested, I don't think it makes sense to pull out because longer term picture for India, I think, is attractive given the fact that a 7% kind of economic growth outlook for 2-3 years at least for now seems to be very clear. And in an economy which at a now at a higher level now, so now given the size of the Indian economy, a 7% real growth or a 10-11% nominal growth creates a significant amount of new GDP every year. So it creates a lot of opportunities for companies to grow and investments to have opportunities to invest. So I think longer term picture, I don't see an issue. But then uh, every bull market we've seen, any previous bull market also, when there's a correction, that correction also can be fast and swift. So whoever is investing at these levels should be ready for that kind of correction.
Scanning through the gainers and the losers, scanning through the gainers and the losers, and last week there's nothing which really stands out for me. We actually underperformed the regional markets, and it was not like a very dramatic kind of an underperformance. Sandeep, the theme last year was buy companies which will benefit when inflation is rising. The theme this year really could be look at companies which would also take advantage when inflation is stable and inflation is coming down. They are two very separate things, Sandeep. I'm just breaking it for our viewers that when you're buying companies which essentially benefit from inflation, that would include, let's say, commodities, producers. When you're buying companies which would benefit when inflation is stable, you essentially would say, I would buy consumers. I would buy companies which essentially have a large raw material cost which is coming in form of agri, or it is coming in form of metals, or it is coming in form of power. So Sandeep, for me that is an overarching theme. Bet on companies which will benefit when inflation is flat or down. How would you bet on that?
Yeah, it's perfectly right, and some advantage of those things we've seen over the last few quarters also as for especially for companies which have been able to show volume growth. So, for example, the auto sector stands out there where because there's been volume growth and raw material price deflation, they've been able to show significant improvements in profitability. Now, a similar thing I would think would happen in consumer durables as well as non-durables going into 2024, a later part of it, maybe not this quarter, going forward, because even as we saw the results of many of the companies, let's say in the apparel segment this quarter, the fall in fabric prices, lower cotton prices, etc., have benefited on the gross margins. But the profitability at the net level, if you leave aside trend, has not improved so much because of the fact that the top line growth is not so much. But as the revival happens in the demand on the demand side, we'll also see that kicking in, and that will create a significant upside in terms of earnings. So I think beaten down stocks in these segments should be preferred at this stage.
Fair enough. Meantime, just taking a look at some of the brokerage notes this morning as well. And you've got Jeffries talking about their overall focus, which is going to be on energy, metals, autos, and the pharma sector when it comes to the earnings performance down the line, saying that the FY24-25 EPS CAGR is projected at about 15%. If we were to, Sandeep, just take out the entire energy space, owing to the way we've seen, the likes of an ONGC perform, the kind of stamp of approval that has been given by the government, if I were to include even OMCs in this basket, what's your outlook for the year ahead, and even when it comes to earnings performance?
Now, Aman, I don't buy these stocks because they are very prone to any kind of government action determining what earnings they can report. For example, this the tax on crude oil, the windfall tax, or the fact that suddenly in the run up to the election, we could see significant fuel price reduction. So what it does to the profitability is very tough to predict. A stability in fuel prices has aided the uptick in OMC stocks, and everyone is turning very bullish on them. But I think there are risks on the horizon which need to be recognized. ONGC, it was very cheap, so it's had an uptick, but it's a very inefficient company in terms of of ability of it to actually increase production. In fact, it's been incurring thousands of crores of capex every year, but its production has actually been falling. Now they are predicting some uptick in production next year, but I don't think it's significant to drive such huge re-rating.
All right. Let's also get in your take then. We were just talking about this big capex thrust and a push there. What is it that you would be looking at by way of individual opportunities for the long haul when it comes to the capex theme? If I were to say capex, what really comes to mind for you when it comes to individual stocks?
I think across the board, we are seeing benefit of the capex cycle among companies. So the largest player, L&T, is the biggest beneficiary, obviously. Then on the large cap side, we've seen ABB and Siemens deliver very strong numbers, and that's also driven the re-rating higher. So, but ABB and Siemens, I believe, are now trading at valuations which leave little upside in the near term. Then you come to companies like Thermax, etc., where also the valuations seem to be stretched. And then there are construction companies. So among the construction companies, I think there are few where I believe still the valuation growth paradigm looks attractive. One of those companies which we own is Ahluwalia Contracts, where the company has done very well and it's built up orders significantly, and its current orders plus L1 itself is around nearing 15,000 crores, which gives it visibility for 2-3 years growth. And valuations are still reasonable. So I think that's one company which we have, and NCC obviously we have, but there I think the re-rating has happened. Now it will be driven higher more by earnings growth.
Sandeep, but is that space in a good turn? I was looking at numbers from Ahluwalia. I think margins were 24%. 24% margins are enjoyed by FMCG companies. NCC you just mentioned. I was looking at notes from the con call of Capacita. BL Kashyap numbers not bad. Is that space in some kind of a turn? I mean, what we call in Hindi the thekedari business.
Yeah, it's in a good space, especially because of the fact that the competitive intensity is reduced. And one of the very important facets which I have observed is, and which many of the governments, both state and central governments, are now driving is that timely completion of projects, and which leads to timely realization of dues. Because earlier in this industry, the big problem used to be even few years back that every project used to be delayed, payments used to get stuck, etc., and that used to get these companies into problem. And that has got resolved to a very great extent. And that by itself is something which should actually lead to a re-rating of the sector.
62 points higher, that is what markets are indicating in terms of the SGX opening. Sandip Sabharwal, always a pleasure. Thank you very much. Hopefully next time there are no technical issues.
Technical issues are not in my hand.
ये बिल तो नहीं दिया था ना, बिल तो दिया था ना. It is not like a bill late repayment, right?
No, it was more related to your Zoom connection.
Okay, no, I was just checking. Maybe you forgot to pay your bill. It's okay. All right, have a good day. Thank you very much for joining us.
Yes, bye.
Nuresh, we've discussed Maruti a